Assalamualaikum to Dr. Sharul. Today, me and my group members will present our group assignment about Seng Industri Berhad and FATIN Industri Berhad. Firstly, allow me to introduce myself. My name is INDRIYANTI SUHARTO as a group leader, and the group members are ALISA FATIN, NURNASUHA NATASYA, and AQILA FAKIHAH. First, I will start with the background of Seng Industri Berhad. Seng started incorporated on 1994 and later listed on Bursa Malaysia on 2000. It's one of the premier and longest established biscuit manufacturer in Malaysia with 3 subsidiaries company, namely Seng Perusahaan Malaysia, Seng Honyung Brothers, and Incoming Sport Industry. Next, with the background of FATIN Industri Berhad. FATIN started on 1962 by and later listed on Bursa Malaysia on 1992. It's one of Malaysia's oldest and most prestigious producer in the manufacture and sale of biscuits and currently market both domestic and globally across the world.
As you can see from this slide, Seng show a consistently strong liquidity position, which is all current ratio for the past 2 years are above 1, indicating a solid ability to cover its short-term liabilities. However, water liquidity is weaker, especially in 2022 when the ratio dropped below 1, that is 0.93. It indicates that water did not have enough current asset to cover its short-term liabilities. Next liquidity ratio is quick ratio. Seng has a stable quick ratio over the past 2 years compared to water. Seng is in a solid position to meet short-term liabilities without depending on inventory sales. Water quick ratio has been consistently below 1 over the past 2 years. It indicates that water is lack in managing its current asset to fully cover its short-term liabilities without depending on inventory sales. The third liquidity ratio is cash ratio. Overall, Seng is in a good position in terms of cash liquidity, especially in 2023 when it has more than enough cash to cover its short-term liabilities. However, for the cash ratio for water has been very low over the past 2 years. Despite a slight improvement in 2023, the company still faced several liquidity challenges as it lacked a sufficient cash to cover even a small portion of its short-term liabilities. Seng days and receivable fluctuate over the past 2 years, with an increase in 2022 but returned to a quicker collection cycle in 2023. The improvement in 2023 indicates a more efficient receivable management compared to a previous year. Water's days in receivable has steadily increased over the past 2 years. This worsening trend suggests inefficient in managing receivable. It is the same situation with account receivable turnover. Seng that is more efficient at collecting its receivables has a high and improving turnover ratio, while water is struggling with a steadily declining turnover ratio, suggesting worsening inefficient in receivable management. Next liquidity ratio is days in inventory. Seng show continuous improvement in its days in inventory with a decrease from 48.08 days in 2021 to 44.19 days in 2023. This reflects better inventory management and greater operational efficiency, allowing the company to sell inventory more quickly and improve its liquidity. Water has increased in days in inventory in 2022, but decreased to 66.98 days in 2023, reflect better inventory management as the company is now moving inventory more efficiently. Last liquidity ratio is inventory turnover. Seng inventory turnover has shown a steady improvement over the past 2 years, indicating stronger inventory management, better liquidity, and higher operational efficiency. It shows that Seng moving its inventory faster than water. Water has a progress in managing and selling its inventory, but still less efficient compared to Seng.
In 2021, the return on asset for Seng Industry is 30.15%, meanwhile for water industry is 2.86%. This shows that Seng Industry able to generate high profit from its investment in total asset, while water is unable to generate high profit from its investment due to lower return on asset. Meanwhile, for 2022, the return on asset for Seng Industry dipped slightly to 12.25%, and the ROA for water industry plummeted to negative 8.08%. Lastly, the return on asset for Seng Industry in 2023 surged to 80.89%, meanwhile for water industry also increased to 11.19%. The possible reason between these increases is maybe because of strategic business improvement for both companies. For 2021, the gross profit margin ratio for Seng Industry is 27.61%, meanwhile for water industry is 25.75%. This shows that Seng Industry are able to generate more profit after deducting the direct costs from its sale compared to water industry profit. In 2022, the gross profit margin for Seng Industry decreased slightly to 22.72%. Meanwhile, for water industry also decreased to 21.85%. The gross profit margin for Seng Industry in 2023 is 30.36%, and for water industry also increased to 22.81%. The increases of gross profit margin for both companies may be because of strong operational efficiencies. The third ratio in profitability ratio is net profit margin ratio. As you can see in the graph, the net profit margin ratio for Seng Industry in 2021 is 9.21%, meanwhile for water industry is 2.61%. This shows a significantly higher net profit margin for Seng Industry than water industry. Meanwhile, for 2022, the net profit margin ratio for Seng Industry is 8.19%, meanwhile for water industry is negative 7.65%. This shows that Seng Industry experienced slightly decline but water incurred losses. For 2023, the net profit margin for Seng Industry is 12.62%, meanwhile for Huatai industry is 30.43%. Hub Seng rebounded strongly while Huatai showed improvement but remained lower. In 2021, the fixed asset turnover for Hub Seng industry is 3.78 times and for Huatai industry is 3.39 times, shows that Hub Seng had a slightly better fixed asset utilization. For 2022, the fixed asset turnover for Hub Seng industry is 4.08 times and for Huatai industry is 3.27 times. The improvement in fixed asset turnover for Hub Seng industry is maybe because of the better operational efficiency, and the decreases of fixed asset turnover for Huatai industry is maybe because of underutilized assets. In 2023, the fixed asset turnover for Hub Seng industry increased from 4.08 to 4.77. Meanwhile, for Huatai industry, decreases to 1.85 times. Hub Seng industry continue growing, but Huatai's efficiencies dropped significantly. Last ratio on profitability ratio is total asset turnover. In 2021, the total asset turnover for Hub Seng industry is 1.43 times. Meanwhile, for Huatai industry is 1.1 times. This shows that Hub Seng industry are more efficient in managing all assets to generate sales compared to Huatai industries. In 2022, the total asset turnover for Hub Seng industry shows slight improvement from 1.43 to 1.5 times. Meanwhile, for Huatai industry, the efficiency declined from 1.1 times to 1.06 times. In 2023, the total asset turnover for Hub Seng industry remained the same, which is 1.5 times. Meanwhile, Huatai industry performance significantly dropped to 0.8 times. This decreases is possibly because of reduced sales or underutilization of assets. In 2021, the debt ratio for Hub Seng industry is 32.89%, meanwhile for Huatai industry is 67.63%. Shows that Huatai industry assets are financed by debt and have high risk, meanwhile Hub Seng industry assets are financed by debt and have low financial risk. In 2022, the debt ratio for both companies increased. The ratio for Hub Seng industry is 33.7%, meanwhile for Huatai industry is 78.06%. Let's look at time interest and ratio. Time interest and ratio for Hub Seng industry in 2021 is 1,382.63 times. Meanwhile, for Huatai industry is negative 30.97 times. This shows that Hub Seng industry are better in managing debt obligation compared to Huatai industry. In 2023, the time interest and for Hub Seng industry increased to 3,259.1 times. Meanwhile, for Huatai industry, it decreased to negative 234.8 times.
Next, I will present about return on capital, which is return on equity by shareholder. From the curve, it shows return on equity of Hub Seng decreased in 2022, means slightly less efficient in generating profit from its equity, but increased drastically in 2023 due to increasing in net income and lower cost operational. So, for investor, it's a good sign to invest. For Huatai, the return on equity curve show positive in 2021 and 2023, but show negatively in 2022. This means Huatai suffered a loss due to decreasing in revenue from the domestic market, but it recovery in 2023 quickly because show an increase to 51% due to higher revenue at that time. For market return on equity by year, Hub Seng managed to do well in 21 and 22 and pay higher profits to their shareholder than Huatai. But in 2023, Huatai managed to pay higher to their shareholder than Hub Seng. From the curve, it shows earning per share of Hub Seng is higher in 2023, which is RM 57 cent, then in 2021 is RM 34 cent and RM 33 cent in 2022. It is because of the increase in net income due to higher sales and marketing. For Huatai in 2021, it saw positive earning per share but dropped to negative in 2022, signaling a loss per share due to reduced profit and increase in expenses. By 2023, the company made a recovery by raising the earning per share, which is RM 14 cent because of higher revenue and better operational performance.
For overall view, Hub Seng Industries Berhad is better than Huatai Industries Berhad. From the analysis, it can be concluded that Hub Seng Industries Berhad has better in financial performance and managing the company than Huatai Industries Berhad in terms of liquidity ratio, profitability ratio, leverage ratio, return on capital and market ratio. There are 4 reasons to invest to Hub Seng Industries Berhad. The first one is stability in financial performance. As we can see, the percentage of current asset grew to 0.22%, which is from 2.05 in 2022 to 2.27 in 2023. This indicates the company's strong ability to make short-term liabilities with its current asset. The second one is profit growth. The gross profit margin increased almost 7% from 23 to 30 in 2022 to 2023. Next, the third one is low economic sensitivity as net profit margin improving from 8% in 2022 to 13% in 2023. Last but not least, high product quality. Hub Seng Industries Berhad's asset turnover increased from 4.08 times in 2022 to 4.77 times in 2023.